My name is Arira Joseph. I am the founder of Believers Academy. At Believers Academy, our core principle is to provide financial education and financial empowerment. So we teach individuals what they should know about in the stocks market, how they can profit from the stocks market. We teach them how they can profit from the forex market. We also teach them how they can profit from the crypto market. Not just education, we also provide financial empowerment. So currently there's a free $100 we are giving to everyone that has subscribed or will subscribe to my YouTube channel. Today is the 14th of November of October 2025. So let's head over into investment proper. Let's say you want to buy the shares of a company and you're wondering which company should you buy because your mother over 30 years investment just went to the trash. So before you buy the shares of any company, there are 7 things you must look out for. The first thing you must look out for before you buy the shares of any company is the company's revenue. The revenue of this company you want to buy their shares must be growing consistently for the past 5 years. The next thing you have to look out for before you buy the shares of any company is the company's profit. So profit is the second thing you have to look out for before you buy the shares of any company. The third thing you have to look out for before you buy the shares of any company is the company's cash flow from operating activities. Now, what does this stand for? Cash flow from operating activities is the money a business generates from doing business activities like manufacturing and sales. So the cash flow from operating activities for the company you want to buy their shares must be growing consistently for the past 5 years. The next thing you have to look out for before you buy the shares of any company is the company's economic moat. Now, economic moat is what the company has now that is making them relevant now, make them relevant in the future. Economic moat is what the company has now that is making them relevant now and make them relevant in the future. So we want to buy the shares of a company that is relevant now and will also be relevant in the future. So how do we look for economic moat? The economic moat for a company you want to buy their shares can be gotten by using this method I stated down. The first thing you have to do is to identify the industry of the company you want to buy their shares. Let's say you want to buy the shares of Coca-Cola. First thing you do is to identify the industry of Coca-Cola. The next thing you to do is to identify the industry of other players or identify the companies that are in the Coca-Cola industry. Other players in the Coca-Cola industry. So let's say Coca-Cola is in beverage and drinks. You're going to identify other players in the Coca-Cola industry, beverage and drinks. The third thing you do is to look for the revenue, the profit, the cash flow for operating activities for the past 5 years for all these players in that same industry. So Coca-Cola, you look for their revenue, their profit, their cash flow for operating activities for the past 5 years and check whether it's growing consistently for the past 5 years. You repeat that for other companies in the same industry. When you do so, you will now look for the company that has the greatest number in terms of their revenue, their profit, their cash flow for operating activities, and their customer base. That company is the king of that industry. So when you find the king of that particular industry, the next thing you to do is to identify whether this king of this industry is working on any technological innovation. If they are, it means in the future, they will still be king of that particular industry. So when you've done this, the next thing you have to look out for before you buy the shares of any company is to look out for the company's current ratio. Now, what is current ratio? Current ratio is current asset divided by current liabilities. It tells investors whether a company will be able to pay their short-term debt. So if the current ratio value is less than 1, it means this company want to buy their shares, will not be able to pay their short-term debt. If the value is greater than 1 or equals to 1, it means this company will be able to pay their short-term debt. So the next thing you look out for before you buy the shares of any company is the company's returns on equity. Now, returns on equity is net income divided by shareholders' equity multiplied by 100/1. So for us, our standard is that the share returns on equity for any company want to buy their shares should not be less than 10%. So the last and the most important thing you have to look out for before you buy the shares of any company is the company's intrinsic value. The reason why we have to do this is because a good company can be a bad investment if you're buying this company shares at the wrong time. So the important question intelligent investors will ask here is, what is a good company? When is the right time? So a good company is a company that has had consistent growing revenue for the past 5 years, consistent growing profit for the past 5 years, consistent growing cash flow for operating activities for the past 5 years, a strong economic moat, returns on equity that is not less than 10%, current ratio that is not less than 1. So these are the qualities of a good company. So when you find a good company, you want to check whether it is at the right time to buy the shares of this company. So how do you do that? You identify the right time by knowing the intrinsic value of this share. So when you find the intrinsic value using a calculator, for our premium student, we give them our calculator, our intrinsic value calculator. When you find the real share price of this company, that is the intrinsic value from the calculator, you will now check to see whether the intrinsic value is greater than what is quoted in the stocks market. If the intrinsic value is greater than what is quoted in the stocks market, and let us say for Coca-Cola, we're going to say, okay, that means Coca-Cola is selling at an undervalued price. It means we can buy. But if the intrinsic value is below what is quoted in the stocks market, it means this company is costly. We should avoid them. If you have gotten that, we are going to proceed to the next segment where I'll be teaching you practically how you to buy the shares of company. Okay, so the shares of the company you want to buy is Coca-Cola. Coca-Cola. The web app we use to buy the shares of Coca-Cola is investing.com. So let me open my browser. I hope my screen is still recording. Okay. So I'm going to type investing.com. Investing. Okay, it has come up already. Press go. Okay, it has loaded. Investing.com is loading. To the top right, you see a search icon. So you click on that search icon. I'm going to type Coca-Cola. Coca. Coca-Cola is the shares of the company I want to buy. Okay, let me allow it to load. So here is it. The first company that pops up is the shares of the company I want to buy. Okay, it's loading. Let me allow it to load. Okay, Coca-Cola is loaded. The current share price of Coca-Cola is $66.80. So what are we going to do now? We want to look for the financials of Coca-Cola. So we're going to click on this financial tab. We'll scroll down. We're going to look for revenue. This is the total revenue of Coca-Cola. Okay. We're going to go back to the beginning of our data. So for Coca-Cola, their revenue for the year 2020 was $33,014. So let's scroll down a bit. They say in millions of USD. So you're going to multiply this $33,014 by 1 million. That's going to give you 33 billion. So for 2020, Coca-Cola revenue was 33 billion. 2021, it was 38.65 billion. 2022, it was 43.00 billion. 2023 was 45. Okay, 2022 for 43 billion. 2023 45 billion. 2024 47 billion. So Coca-Cola has had consistent growing revenue for the past 5 years. That's quite impressive. Quite impressive. So the next thing you check for is for Coca-Cola net income, or you call it profit. I call it profit, but on the calendar it's called net income. The financial statement is called net income. Look at net income here. So for the year 2020, Coca-Cola's net income was 7.7 billion. 2021, 9.7 billion. 2022, 9.5 billion. It dropped. 2023, it moved to 10.7 billion. 2024 is 10.6 billion. So Coca-Cola has 3 years of consistent growing net income. 7.7, 9.7, 9.5, 10.7, 10.6. So 3 years of consistent growing net income in the past 5 years. So the next thing I'm going to check for is Coca-Cola cash flow from operating activities. So we are going to go back to start from the year 2020. For 2020, their cash flow from operating activities was 9.8 billion. 2021, 12.6 billion. 2022, it dropped to $11 billion. 2023, it moved to $11.5 billion. 2024, it dropped to $6.8 billion. So they've just had 2 years of consistent growing cash flow for operating activities. The next thing you want to look out for is Coca-Cola's returns on equity and current ratio. So let's go down, let's scroll down, look for returns on equity for Coca-Cola. For Coca-Cola, this is their returns on equity. To the right of it is 42.37%. That's impressive because our benchmark is that the returns on equity for any company want to buy their shares should not be less than 10%. So it is 42.37%. So we'll scroll down and look for their current ratio. Coca-Cola current ratio is 0.84. So Coca-Cola is really not an impressive company because they've had consistent growing revenue for the past 5 years. Consistent growing profits 3 years in 5 years. Their cash flow from operating activities is 2/5. They have consistent growing cash flow 2 years in 5-year period. Their returns on equity is 42%, but their current ratio is 0.84. So They are fairly a good company. I'm not really that impressed about Coca-Cola financials. So why I'm not impressed about their financials, I'm going to check for their intrinsic value to know whether Coca-Cola is selling at a discount to make my investing decision. So what I'm going to do here is I'm going to go to my intrinsic value calculator, the one we give our students that subscribe. Okay, name of company, Coca. The next thing I want to put in this calculator is the free cash flow. So go back to our calendar, our statement for Coca-Cola. We're going to look for the free cash flow of Coca-Cola. So where do we see the free cash flow of Coca-Cola? Under the financials, financial tab, you click on financial summary. Look for the levered free cash flow of Coca-Cola. We'll scroll down. Now you can see cash flow, levered free cash flow. So we're going to scroll down. Okay, it is 14.962 billion. 14.962 billion. We'll go to our calculator and put 14.962 billion. 6 zeros at the end. 1, 2, 3, 4, 5, 6. Returns on equity for Coca-Cola is 42.3. Period. Now, what does period stand for in this calculator? What period stands for in this calculator is the time in the future that Coca-Cola will be what, or let me put it this way. You know, the mathematical formula we are using to calculate, to derive, to know the intrinsic value of a stock is the discounted cash flow formula method. So in the discounted cash flow formula method, we try to know what will be the future worth of a company based on their current free cash flow. So that future time is what we are calling period. And that future time period should not be less than 10 years. So for Coca-Cola, want to know what will be the worth of Coca-Cola in the future based on their free cash flow. So let us say 11 years time, what will be the worth of Coca-Cola in 11 years based on this their $14.962 billion. So outstanding shares. Let me go back to my calendar and look for outstanding shares. So you're going to scroll up and click on general. When you click on general, you click on ownership. Scroll down. Okay, common stock held. Okay, for Coca-Cola, the outstanding shares of Coca-Cola is, look at it here, percentage of outstanding share 100%, 4.30 billion. So we'll go back to our calculator and impute 4.30. Okay, 430, then billion. 1, 2, 3, 4, 5, 6. Coca-Cola's current share price is 66.6. So we have put the name of the company Coca-Cola Incorporated. We imputed their free cash flow 14.962 billion. The next thing we imputed in this calculator is their returns on equity. After that, we put the time period in the future, want to know the worth of Coca-Cola based on their free cash flow. After that, we imputed their outstanding shares. The next thing we did is to put their current share price. Then we click on calculate. The intrinsic value of Coca-Cola Incorporated is $80.56 and it is 17.32% undervalued. So why Coca-Cola has not met all our checklists based on the financials, Coca-Cola is selling at a discount. So Coca-Cola, since it's a dividend paying company, we can allow you to buy. You can buy Coca-Cola shares now and still make profit, because as of 14th, today is what? Today's date is, was it 13th or 14th? 14th of October 2025, Coca-Cola is selling for a 17% discount. It's 17% undervalued. So you can buy Coca-Cola shares and still make huge profit because they are 17.32% undervalued. So that will be all for the analysis of Coca-Cola. My name is Arora Joseph. I am the founder of Blue Academy. As usual, take charge.